Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 50th Commitments of Traders Report of 2022, and as we always do, we shall start off by looking at the largest changes in commercials positions. Before we jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBase.com, you'll find a lot of educational material, not only in written format, but we have some very useful videos as well. These videos can guide you through the analysis process, showing you what kind of tools there are to analyze this very valuable data. At the end of the review, I am going to show you just a brief picture of our wonderful iCOT intraday indicator with AfterSignal on the Euro US dollar currency pair. That's going to be actually the last market that we will look at in the classic COT review part of the video. So let's start off and open rough rice. As you can see, here we have a 27% change in commercials. We are analyzing net positions and the legacy data or classic COT report type. So there's 4 different COT report types. And we are analyzing the futures and options combined data type. I should point out that in these reviews, I'm not showing all the markets, just a couple of market categories. And in this review, we're going to be seeing a lot of grains coming up. So the first one is rough rice. As I mentioned, 27% change over here. You can see that change size over here on the, of course, commercials represented with this red line, large speculators in green, and then we have small speculators or non-reportables as CFTC calls them on a separate scale chart over here. So the magnitude of the change in their net positions, and actually all major commercials and large speculators traders category, was quite significant. We have seen larger changes in the past. This is a bullish COT change signal, suggesting in the next couple of days we should witness a bit of a rise in the market. But caution is advised. As you can see, the previous larger than average change size from last week did not actually accomplish this. And this is, of course, just a normal example of how the market can react. This happened actually actually back in October. We had some significant bullish COT change signals preceding this move in the market. So I think this is a good example of how you should interpret this recent change in traders' net positions changes. It did actually halt this decline, that's for sure, but we may have to wait a week or two before expecting a move in similar manner as we had back in October. Now, if we switch to the 5 years chart, we get a chance to examine the stresses in this market that have built up towards bullish extremes. You can see from that October example I was showing you that actually helped the market continue its rise. And we are still in this region. We have seen greater extremes in the past, which is, something to know and understand that we can actually reach those levels. But this is an example where the extreme is pointing in the direction where the trend is headed. So that's something we should definitely keep in mind. The next market will be soybean meal. Here we have a 19% change in commercials net positions, and if we switch to the 1 year's chart, then we can have a chance to look at it. It is larger than average, but I wouldn't consider this to be that exciting or anything big. Last week we had this greater change that actually resulted in a halt in this rally. We could not breach those highs before, so I would consider that to be a successful signal. And we're witnessing another bearish COT change signal this week. Now, moving on to the 5 years chart, not only do we have a bearish COT change signal, the extreme analysis is indicating that the market in the medium to long term may actually switch its course from this rally that's been going on, and we may actually start witnessing a top developing in soybean meal. Moving on to an energy market, heating oil. Here we have a 14% change in commercials net positions. As you may see, this is greater than average, however, not surprisingly large. Again, last week's change signal was greater. It was actually successful, pushing the market higher. So let's move on and have a look at the longer term perspective here, which, as you may see, is more or less in between the two extremes. I mean, the current reading between the most bullish COT extreme levels that were the case back in February of 2020 to the most bearish extreme early 2018. So the level that we are witnessing right now is in between, meaning there's not much of an extreme that we can conclude. If you really want to try, then you have to go into a shorter time frame. I personally like to start off extreme analysis on a 5 years time horizon. I think it gives you a more precise measure of stresses, and occasionally I may actually open up a 10, 15 year or even an all-time COT history of the market. Moving on to large speculators COT extreme analysis, we have oats. So as I told you, we are talking mainly about grains. Now, oats is a very small market. As you can see, there are times when simply there's not enough data and CFTC would not publish a report. You can see in the past we did actually have on a weekly basis, but here starting early this year, we have periods of times when there's no data. Nevertheless, it does, this 5 years chart, of course, would help us identify extremes, and this is a bullish COT extreme. 278 reports in large speculators. So we have not seen such an extreme for many years. Now this can grow to even greater levels, so that's just putting it out on the table for those who are just joining and starting off COT analysis, that these extreme cases can be present in the market for quite some time before you actually see the market react. But you can see that the oats market has been in a decline basically since the entire this 2022 year, and we are getting this bullish COT extreme as that's happening. So suggesting that we could see a bottoming in this market in the next couple of months ahead of us. Soybean meal we talked about. Let's open wheat. Here we have a 128 report extreme, which is a bullish COT extreme again, basically correlating with the picture we have seen in oats. We have seen greater extremes, so you have to go scroll back to the early part of this chart, the 5 years chart, to the end of 2017. So this trend in the price of wheat can continue, and of course we'd be expecting stress levels building up to the bullish side of the market. So that's something I think quite interesting, and one might have their eyes open for opportunities in the next couple of months ahead of us. We're going to jump over wheat complex, the Minneapolis wheat, and open euro as I promised. Of course, this is the euro futures, and we're going to have a look at the euro US dollar currency pair. So there's always a bit of a slight difference between the charts. And here you can see that there is an unquestionable bearish COT extreme building up after having a bullish COT extreme built up basically this summer. So as the euro was losing value against the dollar, we were not surprised to see a buildup in the bullish COT extreme. Now that the euro has bottomed and we are witnessing it strengthening, we are seeing traders shifting their positions accordingly. Now, is this a point in time where you want to, consider the possibility of euro shifting back towards a more pessimistic route and start declining? I don't know. Nevertheless, it is quite visible that stress levels are actually following the movements of euro. Now this is where the iCOT intraday indicator can come handy. This is a 4-hour candlestick chart showing you how the system has caught this bottom. Now with the after signal, you're actually filtering out a bunch of signals that you're not going to enter, and enter only when it's time to enter. Okay, so this is a 4 hours candlestick chart. You can go down into the 1 minute candlesticks, or even, you know what, even 15 seconds. This indicator will help you. Now, for those who are new to this indicator and what iCOT stands for, it is intraday COT indicator. However, it is not data coming from CFTC. It is our own indicator that we developed after many, many years of research. And we are very proud of it. We spent a lot of times, obviously, knowing the benefits of classic COT analysis. Our goal was to come up with something that can bring this into the micro level. And this is what it does. Basically, the iCOT in itself, we have scores. This is really the heart and soul of the indicator. They are very similar to the charts we are used to in classic COT analysis. We are analyzing stresses in the market. We do have commercial extremes. They're represented with the yellow diamond over here. And when a candlestick changes color, that's indicating that stresses are building up in speculators. And if we have them at the same time, supported by this balance line, then we are getting a vertical, as we call them, stripe signals that are the strongest. What the after signal does is it filters out signals that you don't necessarily want to enter because stresses are building up, and as that is happening, you're getting signals after signals. So that is where the after signal can be very, very helpful in determining when you actually want to enter the trade. And here we have a bunch of wonderful examples. This is crude oil, showing you how efficient this indicator is. I very much appreciate your attention. Thank you very much for being with me in this recent review. I hope you will have a wonderful weekend, and I hope to see you in my next COT review. Take care. Goodbye.